Hey, good morning, everyone. Brian Hoops here with Midwest Market Solutions. This is Market Insider TV. This is our opening commentary on Thursday morning, November the 14th. Good morning, and welcome to the broadcast as we take a look at some overnight action, news affecting our markets. And I have to say, the news is fairly slim this morning, with no export sales because of Monday's Veterans Day holiday. So they're out tomorrow morning. The EIA report that normally comes out on Wednesdays, that was also delayed until this morning. That'll be 10 o'clock Central Time instead of 9:30 as it's normally issued. So we'll have export sales on Friday as well as NOPA crush report out at 11 o'clock Central Time. We have not seen any estimates for that crush yet. Hopefully we'll have them tomorrow and be able to share them with you prior to the report. Let's look at overnight as we're seeing dollar strengthen once again. Up another 46 points. Of course, we know this is not bullish for any commodities. We see gold and silver taking it on the chin. As a result, down $23 in gold, silver off 39.38 cents. Stock market a little bit weaker here while crude oil recovers to at least the $69 area. Not a surprise to see crude oil recovering from where it was, but to extend gains, that may be a difficult challenge. Quiet trade in the overnight, down a penny in corn, beans off a half, meal down a couple more dollars, hitting contract lows. And we see wheat down 3 to 3.5, 4 in Kansas City new crop. The oats are trying to trade firmer here. They've dropped since we've posted their reversal at the 405 area. We posted on Twitter about a chart about that reversal in oats, knowing possibly where this market is going. And they've pulled back from 405 down to 345 at least. So you're looking at over 60 cents, 50, 60 cent drop from their highs. Let's talk about some news here this morning. Follow us on Twitter, Midwest Markets. Brian Hoops will give you the latest information as well as text service. If we have any private exports or anything that come out this morning, we'll text them out. Export sales, any other news will be texted out. And you can also sign up for our YouTube series and at our website, MidwestMarketSolutions.com. Okay, weather in South America remains really ideal for corn, soybean, seedings and development. Good rains are forecast over the next 7 to 10 days for Brazil and Argentina. The hard red wheat areas have received best rain since last spring. That's improving the conditions before dormancy. There's more chances of rain here in the U.S. Really a little bit for the weekend, but more into Sunday, Monday type event. That looks to be a pretty big, sizable total of rain coming in next Monday for the hard red wheat belt. We had PPI numbers out this morning, and it rose to 2.4% above expectations. The core PPI also rose to 3.1%. That was above expectations. So both PPI, CPI now officially back on the rise. Core inflation is above 3%. The Fed's job certainly not over with at this point in time. CONAB out this morning didn't make major changes here, but they did raise their soybean production estimate to 166.14 million tons. That's up just slightly from October, but it's still lower than the current USDA figure of 169. Corn production at 119.8, also up slightly from their previous numbers. Remember last year, USDA said they'd produce a 152 crop in Brazil. So this crop is going to dwarf last year's crop, assuming good growing conditions. If we do raise this type of yield, we're looking at massive supplies out of Brazil. And that certainly is going to cut into U.S. business, U.S. exports. I am very concerned that a lot of this business that we've seen as far as export sales go, especially to China and the unknown destination, will end up being canceled at some point in the winter months because of expectations that Brazil's crop will be large. Remember, these are hedges that China has booked. They have not taken delivery of them at this time. So last year, grains did peak around November the 15th and fell into the end of the year amid favorable Brazil growing conditions. Conditions were not ideal in Argentina last year. If you remember, very dry conditions, and that led to a huge rally in soybean meal as U.S. exports really took off and boosted because of Argentina lack of production. This year, it's completely different. We have meal at contract lows, and markets anticipating big crops coming out of Argentina and Brazil this year. So in the cattle markets, Packers have been kind of trying to cut their kills, prop up their boxed beef margins, and that did not work yesterday. We saw lower cutouts, light fed cash cattle trade in the north at 185. That's $1 to $3 softer than a week ago. We haven't seen anything on a dress basis or in the Southern Plains, but we may end up seeing some 185 up to maybe 187 today, tomorrow, as I think your cash is going to be a little bit softer this week. Feedlots that are hedged will be taking that and taking off their hedges. And it's going to be a struggle for this cattle market here going forward until we get into some tighter supplies. And that could be next month and certainly into January, February, where things get much tighter. That will be more of a bullish time frame. But here in the near term, I think we're going to struggle. I hope you have a great day of trade. And as always, reach out to us. We'd be glad to talk markets with you. You can reach our offices. The office numbers there. You can call or text. Just go to MidwestMarketSolutions.com. Have a good day. We'll talk to you soon.